what's the worst personal business sales story you could share with us? Like where just something just completely eroded, or like, man, the skeleton's in the closet. I'm just really interested to understand, like, what's the worst you've come across?
Well, I hope this counts, but so I've been in the business valuation space, or acquiring and divesting small businesses my whole career. So I've been around a lot of small businesses, but for this one in particular here, when I first got into when I bought a brokerage firm, I made a trip to a suburb of Houston to deliver some valuation news, and we kind of went through our whole thing of, hey, here's what it looks like, and here's what you're going to net. And I could tell it wasn't really, we weren't quite at the expectation level of the owner. So, okay, we did our thing, and I left. And then the next morning I saw a headline and looked into it, and the business burned to the ground that night. So,
man,
I don't know.
Oh, that would be very serendipitous.
Yeah, I never followed up on that one.
Yeah, that would be very, very serendipitous. Oh, man. I wonder if their insurance broker caught on to that too.
Yeah, I have a funny feeling that there was a different number from the insurance carrier, is my guess.
Yeah. Oh man, wow. Yeah, that's great. That's crazy that you caught that too. That it just, yeah, I just you were able to watch that and catch that. So
yeah.
Hi, everybody. Welcome back to another episode of Brewing Business with Brady. Today's guest is Dan Altom. He is the managing director of Sunbelt Business Brokers, and we are so excited to have you on the show today, Dan. Thanks for being here.
Hey, thanks so much. Looking forward to it.
It's a personal thing for me. I love the art. I call it art, and there's a science of business valuations and buying and selling businesses, and those types of transactions. It's just something that I personally geek out on, that, I did something different in my career. I think that I would have wanted to get more into the M&A space overall. That it's just a fascinating scene for me. So, yeah, I'm really excited to be able to talk with you today, and for our audience to get, a lot of these questions out that really, I think, will provide a significant value for our audience that are potentially looking at buying a business, selling their business, and how to go about that and do things well. And so really, really excited to have you on, Dan.
Great.
So we ask every guest, what's in the mug today? How do you start your day?
Yeah, with 2 or 3 of these guys, right?
Wow, 2 or 3. Good deal. Good deal. You're my kind of guy.
Well, I'll disappoint you a little bit. It's just whatever's in the Keurig machine, right?
Okay.
I'm not a coffee connoisseur in the slightest.
Fair enough. As long as it's coffee. That we've had a lot of variety on this show of what people start their day with, but as long as it's coffee, then we're safe. Yeah.
That's funny.
Yeah. To kind of dive in, that I'd love to understand, what are the pitfalls that business brokers and M&A advisors can help owners avoid when selling their business? And a lot of our audience, Dan, they are in the lower middle market, which really represents, in my mind, in between 50 million in revenue, sometimes up to 75 million. And so in that space, what do you find are some of the major pitfalls that, they should really be considering when potentially selling their business?
Sure. No, that's perfect too, because Sunbelt Business Brokers, we're a franchise, international, I guess, big U.S. presence. That's kind of who we cater to, is the Main Street business brokers. We do larger deals as well, but just in that kind of range, our Houston office, our average transaction is, between $1 and $2 million, and so we get to help a lot of those Main Street kind of mom and pop businesses. Just, we're really good at it, but it surprises me how many times that, well, I guess it doesn't surprise me anymore, but so many business owners don't realize that they have something that can be transacted. They just think they're gonna, wrap up their last client with their lease and, and just shut it down or sell their stuff or whatever, So it's really exciting. We're going to talk about that valuation thing, I know, just because that's what it all centers on so much. But, it's really exciting to sit down with some owners and talk to them about their, just their legacy and what that financial impact is going to be for them and, maybe their family, going, for a long time. But yeah, so that's one of the things, is to get involved in the marketplace for a business owner, and to, meet with some folks and find out what the expectations for what that looks like. We have a lot of, we're the bearers of bad news a lot of times, just because the expectation's so far off And we want to, bring something to the table that, is reasonable and doable and achievable, and all those things. So I think just sitting down with some folks and figuring out kind of what that really looks like and how it works into your plans as a business owner. And if you need to make a change, then, you have some runway to do that.
I'm really interested because you mentioned, a lot of people think that there isn't value to transact in their business. And in my experience, or a lot of what I've seen and heard is, there's an overvaluation. It's their baby and they put too much value on it for what it's really worth. And they almost have to be talked down to, hey, this is the real number that your business can transact for. And if you want to get that valuation, this is what you'd have to do. But on the other side of it, I haven't heard as often in today's marketplace that, there's people that don't believe that there's anything that they have built, and that, they're just going to shut their doors one day. So I'm interested to understand, like, what types of examples, like, what do you usually see in the types of businesses, et cetera, that are in that mindset? Like, is there a theme of those that believe that there isn't something to transact, or are you seeing something there?
That's a great question. I don't know if I can track a certain, type of person or type of owner. It seems to be folks that have had their business for a long, long time, and they just kind of been doing things. They plateaued at some point, years ago, usually, just because they were comfortable. I mean, great business, great things. They just, their website maybe is 15 years old and, just some things, and they're comfortable and they're happy, and they just kind of somehow never realized that was a thing, that they could do that they had they just thought they could sell their stuff. Maybe their customer list to a competitor who we always feel like is one of the worst buyers. As far as value goes, when they learn that there's a way to capture that goodwill, and then how that works is always fun to talk to folks about, and why that's something, So just the education part with a seller on what they, may have, whether it's over, under, whatever, just that something there, is fun.
No, I'm sure that it's pretty exciting for some of those people that didn't think that there was much there, right? That, they're just going to sell their assets, that they have a bunch of equipment in the shed or a bunch of vehicles and stuff, and they're just going to get, it's going to be an asset sale, but oh wait, like, you actually built something, you built a system or something pretty unique here that somebody would value. And so I have to imagine that it probably lights them up quite a bit when they see, wow, that I could probably add a 0 to the back end of that number of what I would get for my business, right? So that's awesome. So I'm interested, we're kind of diving into the theme of especially for owners looking to sell their business. I think a lot in, discussions in the M&A space obviously talk about buying businesses and things to consider, but today we'll dive into that a little bit, but today we're especially focusing on the theme of, people that need to sell their business. And there's a lot of businesses out there that they talk about it, that there's a silver tsunami out there, right? That a bunch of baby boomers that are business owners that are going to be looking over the next 10 years or so, and they have to create an exit plan. But then there's this theme around, exit planning and all this. But I'm really interested to understand your viewpoints on what are some of the first steps a business owner should take when considering to sell their business. Like, what are some of the key things that they should start preparing to do and start thinking about when they're considering a sale?
Right, because we do, I agree with all that. But what ends up happening is folks roll into our office and they need to sell their business. Something's happened or there's been a change. And so they've been, well, we should have started this a year and a half ago, is kind of the most common phrase we hear in our initial meetings, and it's kind of like, yeah, I can tell, or you should have, or something, dramatic that they certainly weren't anticipating has happened, and now they need to make a move, and it's a long process. Even if you've got everything ready to go, we kind of walk through it with our, prospects and clients with, we're not going to sell your business by the end of the year. We might get it sold next summer, kind of thing, that kind of thing. It's like, oh, so the timing of it is it's not a transactional on the shelf kind of thing, So, our firm doesn't really get into the exit planning so much in a lot because of that. And also we want to focus on, what we do. But the more folks that come in and go through that valuation process and get an expectation of what it looks like, how it works, and just to understand, we walk through our presentation as, here's what a transaction might look like, and kind of maybe dispel some myths or educate them on some of the things that happen during the closing process. And so that kind of, gives them some thoughts. And we've had more and more business owners in the last few years that have come in and gone through all that. And then they go away, and then, 18 months later, they show up and say, hey, we did some things. We figured out how that worked. Now we understand. And we pull these levers and the business looks better and we get a better multiple and they have better cash flow and those kinds of things. So I think just learning about it and figuring out how it works will just change your mindset of, as a business owner, of what you're going to do to move forward for the next year or 18 months or whatever that plan is.
When somebody comes in, they say, I need to sell my business. You brought up that example that more often than not, it's that they're in a need to sell their business pretty immediately. I think they talk about the 4Ds, like death, disability, divorce. I forget the fourth one, but it's some type of personal life event that forces that, yeah, you have to exit. And it's a serious thing, but I'm interested to understand, somebody walks into Sunbelt and begins talking with your business brokers, hey, I need to sell my business. You need to value that business. What are the steps or the methodologies you use? And for our audience, like, how can they begin to get their mind wrapped around what their business is worth? Like, how would you go about valuing a business?
Sure. Well, the first thing is go see your attorney and get your LLC to reflect those 4Ds. So,
Yep.
So you know what's going on, your buy-sell agreement. Yeah, and that's how we start every engagement, to be honest with you, is if somebody is interested they like the process, they like us, they think we can do a good job for them. The very next thing we do is look at the books, and learn more about their business and kind of review and analysis. And we're not providing a certified product or any of those kinds of things that you're going to use for tax or legal work, but it is hey, here's what we think your business is worth and why. And those whys are we use a risk analysis. We use comps that we have access to. We use, we stress test it against what a bank might do, because in these Main Street transactions, the buyer is likely to use financing. And so we know how that's going to look. So it's all got to work. And so we come back with, hey, here's your cash flow and what we think it is available to the new buyer. And here's what we think all these market conditions and risk analysis and lending things look like. And we come up with the conclusion of, here's what we think when you sell it for, and here's what that transaction might net to you. Because maximizing your value is great, but we really want to maximize what's in your pocket.
Yep.
So, but we work through the whole cash flow model on discretionary. A lot of business owners, there's a blurry line there between your business expenses and personal expenses, and so and that's okay. For the most part, banks and buyers are okay with all that, and we work through that because we really want to show a buyer in a bank what your maximum cash flow that's available to use for the new buyer to use.
I'm interested to understand too, because we've seen this where sometimes we work with clients that are considering buying businesses, and we help them evaluate, hey, what are some different financing options in Brady CFO, as well as we also kind of do a high level valuation based upon historical earnings, really to say, hey, that price that they're asking, that's a tough price, right? I don't know if you should really be looking at that opportunity further. And, more often than not, it feels like there's businesses for sale where the price just feels way overstated. It is way out of range of even what's possible for any bank financing to come in and to actually serve the debt, and so I'm interested, why do you see that business brokers are doing that to where it's just, you see these astronomical asks that just don't make sense? Why do you think that is?
I don't think we do that here, so I don't know.
Fair enough.
Yeah. The way if we have a weird price on ours, look behind the curtains for our business. When you look at some of our listings and they don't have an asking price, that's kind of the same thing. There's a pro and a con to that, because people are going to look at that and go, oh, they must have some nutty price, right? Which is a fair assumption. What we're really trying to do as the broker, though, is that we think maybe there might be a buyer out there that's not an individual using regular financing. So we want to be able to approach a strategic buyer or private equity or those kinds of things who have been dipping down into this smaller Main Street space the last few years, and make sure we can maximize the price with those guys. Because once you establish a price, out there in the market, then that's kind of going to be your max, right?
Yep.
So that's how we work it, is where we may put a no price or call for more information kind of thing. There's a downside because we lose some of the buyers, I know, because they just swipe right or whatever it is. But we're just trying to maximize that price for a particular buyer.
Got it. Makes sense. So I am interested, Dan, because you and I went to a lunch, I want to say about 2 months back, and you specifically brought up that, you feel like SBA loan products are excellent products, in order to buy and acquire a business. And I think that's one of the things too, that at Brady CFO, we work with clients and for our audience too, that one of the big questions that always comes up is, how do I finance it, right? That I do want to buy a business, but what are all my different financing options? And there's a lot of different things that get tossed out there. Seller's notes, can you just do a cash deal that, do you have the cash on hand, et cetera, et cetera. But, I am favorable to using some debt financing because it does provide, that purchase should provide a sufficient ROI, and you're using somebody else's money, obviously with a stated interest rate. But the intent is that you would get a better ROI than what you'd be paying on the debt capital, right? The cost of the debt itself. And I've heard a lot of negative perceptions of SBA financing, right? But you were one of the first ones that had a very positive perception about it. So I'm interested to understand why you feel that way, and if you can expand upon that for our audience.
Well, I think one of our SBA lenders was part of the group paying for that lunch. So
Yeah, fair enough. Fair enough. Yeah, yep. You were hungry.
No, and that is, I run into lots of folks that just think the SBA, they're terrified for it, or they think it's because it's some kind of, you can't, high risk, you can't get a loan anywhere else, lender of last resort kind of thing. Which is not the case at all. They've got guidelines and everything. The biggest differentiator is your typical conventional lender is most likely going to look for those hard assets as collateral for their loan. When you have this business, like we talked about a minute ago, that you have this goodwill piece and the brand and the longevity and just all the things, there's a value to that. And the SBA will absolutely lend on that because they're looking at that cash flow, which dovetails back into that whole, hey, we really want to figure out what the real cash flow is out of your business, and SBA, it's it's not just if you have your community bank that you've been with forever, you can walk down there and say, hey, I need to do X, Y, Z, and they may say, hey, high five and let's go do it. The SBA has a much more stringent underwriting process and those kinds of things. But what I tell our buyers is, hey, you're going to get checklist after checklist, and it's going to look like the same checklist, but just keep checking off the things, and we'll get there. And it's going to take 3 or 4 months, and it's just a process that you have to go through. But that's why I love it. Is it's a known quantity. You get to the end, we can get our sellers much more of their value at close, and so it just works out for everybody. Interest rates are they're okay, but when we analyze the deal, we're looking for that that kind of same thing, that ROI that covers the debt service, allows the buyer to have room for growth and room for their personal expenses.
I think because even at Brady CFO, like we work with a lot of low margin businesses in general, right? That a lot of blue collar, boots and jeans to work every day types of businesses, agribusiness, construction, logistics, transportation, and they don't have the cash on hand to do a deal. And there's so much, I feel like, it's just thrown out there. There's this big trend around buying businesses, right? Or entrepreneurship through acquisition. And there's this trend around the idea, sellers financing. And it's like, yeah, very few sellers actually want to do that. At the end of the day, they're still carrying all the risk. They need their cash up front. This whole theme of you're going to get, you can go buy a business and you can put a note on the business and you could pay the seller over time. You and I both know if we owned a business and somebody presented that option, we'd say, how do we know that you're not just going to run this into the ground, right?
Yeah, I'm trying to get away from the business, not worry about running the business.
Exactly. And so I want my money up front. But the reality, to your point, it's, since these are low margin businesses, sometimes they already have difficulty finding a quality banking relationship as it is. And then that bank's capacity may not be able to help them finance it. I could see if it was an asset deal, right, where the bank could get around financing assets, but especially when it is a cash flow based deal that you value the business on cash flow, sometimes the bank just doesn't know how to wrap themselves around that solely, right? They don't know how to do that. But and what's nice about the SBA financing, I find, is you do go through a stringent underwriting process. And that's actually what you want to make sure that, yeah, you bought a good business, right? That, if the federal government isn't willing to help you buy that business, should you?
Right. Yeah. Buyers ask about who should I hire for my due diligence team. I'm like, well, the bank's going to be on your side. So they'll run you through the grinder for sure.
That's the best advice I've heard, is that even if you were to use a different form of financing, if you're looking at a deal, just run it by a couple bankers that you trust. And, if they would tell you, no way, absolutely no way, granted, banks are probably going to be a bit more conservative, right? They're a bit more risk averse by nature. But if a bank says, like, it's not even middle ground, it's just no way would we do this deal, you should probably be taking a second guess on it, right? So,
and we run a lot of our sellers before we go to market through a preferred lender, and get that, just to make sure we didn't miss something, or just to make sure they're on board, or or maybe something, loosey-goosey with the SBA with that particular industry or style of business or something, just because we want to know, we like to know the answer before the question gets asked. So,
I'm interested because I mean we're kind of shifting from selling that business, and we're talking about how do you finance it. But what's some of the process that you go through to make sure that a buyer is a right fit for a business? How do you align that and make sure that that is in place, that that is the right buyer for the business? Yeah, what's that look like for y'all?
sure. Yeah. That's always kind of a delicate deal, right? Because all the things we do with our sellers is real confidential, so we're out there trying to engage buyers with very minimal information, certainly not talking about the name of the business or location or some things like that, so we're under a little bit of that art versus science thing on how to figure out where we have some good buyers and to maintain that confidentiality with our sellers. So we do try to cast a big wide net at the same time, though. So it's a balancing act of how you engage these buyers. And something I would encourage buyers to do is fill out that buyer profile. If you're going through in the broker space, you'll get a non-disclosure agreement and a buyer profile. Is put some information in there. It's not a credit check. It's not any of this kind of things, but what the broker's doing to try to make sure that they're fulfilling their obligation to the seller is, hey, does this buyer have the capability to pull this deal off?
Yep.
So if you don't list any financial information, a lot of times that's why you're not getting a response from a broker, because they're like, well, if you're not willing to share information with me, why in the world would I share any information about my client with you? And I just have to know that you can pull this deal off, so give us a call or put something on there, but the whole, to be disclosed later or whatever. And it's like, well, okay, then we'll disclose our client's information later, around it we go. So we just really want to have that call. And I do feel a little bad for buyers because at least in the broker space, it's so fragmented and inefficient that if you're calling brokers, you got to call all brokers, because you talk to me, I'm going to show you the Sunbelt businesses we have, which we work really good internally. So that's nice, but I can't go out and help you. Well, I guess I could, but it's just not effective for me to try to go help you find the business over at CBB or Transworld or wherever. So it's just, I hate it for buyers because you gotta spend a bunch of time, and they usually have a job
Yep.
or whatever. And so something else along those lines is it's usually surprising to sellers when I tell them, hey, the likely buyer for your business is not currently in your industry. They're doing something else or working in corporate or something. And that's just shocking for some folks. How are they ever going to do this? And back to your point of like, well, because you've developed this great business with processes and you have a team and all the things, So just trying to find those buyers. And like you said, it's become quite the, I don't want to say trend. I think people are just more aware that they can go do this other thing and they can buy an existing operation and they'll be successful or have a high degree of success. So finding those buyers is exciting, and we get to talk to lots of people who are looking to make lots of changes, and we vet lots of buyers. So we just kind of got a system down for it to just try to figure out that match.
I find that there's a lot of business owners that the M&A space feels very elusive, right? It's that space where it's so difficult, and so there's just so many concepts of it that are so difficult to understand. But most business owners have bought a house, right? And to what you were saying, that even to put an offer on a home, you have to get pre-qualified, right? And so in the same way as a buyer, that you have to have the financial backing, otherwise they're not going to treat you serious. Because there is a lot of confidential information that client is sharing that they don't need, put out into the world. And so in that same way, just like with the homeowner, that they're not going to take your offer seriously unless they know financing is in place and that it's secure, right? And so there's elements here that are so similar. At the same time, there's many elements that are different, right? That the way a home can be valued, and especially as an asset versus a cash flowing business, and how do you value the intangibles, et cetera. There are many, many differences here, but conceptually, I just want to, remind our audience, like, that, it's not as elusive as you think. That at the end of the day, you have to appear like a good buyer. And in the same way as a seller, just like you would prep and sell your home and make it really attractive for a buyer, it works both ways in a business transaction too, right?
Yeah. And even though our clients are the sellers, when we engage a buyer that we think is a viable candidate and is interested, we also make sure that the buyer's not just, we don't want to waste their time either, right? So we want to make sure they have enough information to make an informed choice on if this looks like a business that's good for them. Like if I know you don't want to drive more than 15 miles from your home to a new business and this is on the other side of town, well then let's not even go down that path because it's not going to be a good fit, right? So I don't want to inundate people with spreadsheets and all this stuff. Like I know what you need to know to make a reasonable estimation if you should move forward on this business. So when we get to that point, that's when we kind of keep rolling it forward, and it's a process, and you just got to work through it. And like you said, you need to put your best foot forward, and I'll help you do that with the seller, because at some point, I'm invested as well, or incentivized to get a deal together. So I want to make your offer look as good as we possibly can and realistic, and meet some needs. And I can tell you, hey, this is great. This is where the resistance is going to be. Here's what they're looking at, and just trying to help you manage the pain points as a buyer for that seller to put your best foot forward.
I'm interested, what's your response to buyers, whether somebody coming in wanting to be an entrepreneur for the first time, or it's another business coming in and buying that business? What's your response to those that think, yeah, as long as there's a management team in place of that business I'm buying, that yeah, I can kind of kick my feet up on this one. What's your response to that?
Well, I try to get off the phone as soon as I can.
Yeah.
So we do get that a lot. And it's part of the education process, I think, for the most part. To your real estate point, people try to draw some parallels. And there's quite a few. But what it's not, at least in our opinion, on these Main Street businesses, is that it is not mailbox money. It is not a rental home. It is not something where you can just say, hey, I'll come check in or provide the leadership, or at least that the cash flow that we're representing reflects some owner operatorness, if that's a word. You got your sleeves rolled up and you're doing something. So if you don't have the time or capacity to do that, then that would make it difficult to get that ROI you were mentioning, just because you're going to end up having to hire somebody or somebody's, and then all of a sudden it just eats up your cash flow in these smaller businesses. So I've talked to lots of people, and it's like, well, hey, I have $500,000. I want to buy this business for cash because I'm debt averse and all these things, but I don't want to work there. It's like, well, then the business is probably going to fall apart on you, So yeah. What I do talk about is like, hey, if you take a bigger bite and look at these businesses that start to get to that $2 million or so in transaction value, is what we found, they're more likely to have like this general manager person or a right-hand man or something to where you wouldn't necessarily have to go put hands on, but you still need to, be there to a degree, in our opinion. But there is that person that's kind of running the business already in a lot of cases. But that's still difficult to get behind, in our opinion, on these smaller businesses. You're not going to stay at your full-time, career and be able to run. It's not a car wash, So.
Yep. I tell people the same thing. I just said, the first year in buying this business, you really need to be prepared to be genuinely hands-on, and then you could look at it after that and determine whether you can begin to pull back. But do not go in with the intent that you're going to come in 5 hours a week and kind of check on things and do some leadership meetings and stuff. It won't.
Now, we've run into some buyer groups that, they had something like that set up, or they were prepared for that, or, they had already analyzed that and they're good with that, but when you start kind of crunching the numbers and suddenly you're like, wait, I'm going to have this loan payment of, what, and I'm only going to make this after I, hire a manager. And it's like, so just kind of, I was like, hey, let's get to the end of that movie real quick. Make sure this makes sense for you, and if it does, then cool, let's take a look at it, But if it kind of ruins your numbers a little bit from what your expectations were, then let's look at something else.
I'm interested because as you were talking through some of this, it's a question that came to mind. Like, a lot of buyers out there are trying to look for off-market deals. What would you say? Why would you encourage people to really consider? Especially on the buy side, what would you say to encourage people that they should consider? Working with a brokered deal or a marketed business. I'm interested. I understand your take on that.
Yeah, it's almost kind of back to that diligence piece, right? In theory, as a broker, we've kind of put that business through the ringer already, and we've kind of vetted it to a degree. We don't make any kind of, hey, this is what our client's telling us. We're not auditors, all that kind of fun stuff. But we're not going to take on a client that we don't think we can sell. So we've seen the tax returns, and we've seen all these things, and we kind of know the story. And in a lot of cases, we know what maybe the issue might be that you might not find out until you get pretty deep in the process. Like if we have a customer concentration issue, we're going to disclose that early on in the process, just because that'll knock a lot of buyers out. They don't want that risk. And so if that's their case, then we want to go ahead and get that on the table early, Whereas if you're just working with the seller, they don't see that as a lot of risk because they've had, one major client for 20 years and it's been fine. So they may just, not purposefully, but just kind of not realize that that's a big deal to you, And so if it's your first time going through the acquisition process, you just may not see that. So the flip side is, brokers looking to maximize the price for their sellers. So, you're paying a little bit more, but my opinion on that is if you back up and look at it long term, you're going to buy this business for 7 to 10 or more years. Who cares if it's another 50 grand on $1 million transaction, right? It doesn't change your world hardly at all. But that's real money to the seller. So I just sometimes it's like, well, you don't need to wiggle on the price too terribly much just because it changes your payment by a couple $100, and the longer you take to dilly dally around buying a business, that's every month that you're not making that money.
There are existing business owners, right? And there's a big trend right now of this entrepreneurship through acquisition of, people coming from corporate and deciding, I don't want to do that corporate thing anymore. I'm going to go buy a business and I'm going to run it. And that's how I'm going to live my life going forward. Is I'm not going to go build something. I'm going to buy something existing cash flow. But, especially for people already operating businesses, but are looking, and it could be for a variety of reasons, right? They're looking for a strategic play. They're looking, that, hey, they do have existing businesses that they're operating well and they will continue to operate well. Maybe they do have a management team, but, you have these visionary kind of entrepreneurial, founders that are like, yeah, but I'd love to do something else too, right? I'd love to have something else to the portfolio that, even, that's a personal dream of mine someday is to have Brady Enterprises, right? Where we just have a variety of businesses and we're serving the community, and it'd be great. And to have that variety to it, as long as it made, financial sense too, right? But, for those that are existing business owners, what are some of the key things that you would suggest that they be considering when, starting to look at, hey, I should consider an acquisition here, in order, for growth, or, I do have some spare funds and I need to figure out how I invest those spare funds, and I have this cash flow available and I would like to buy a business. What are some of the first things that you would tell them that they should really have at top of mind as they're starting to consider this?
Sure. No, and we've actually done a few of those transactions here this past couple years, oddly enough, where you got, just like you said, they own a small business and then they buy something that's, trying to think of the examples I'm thinking of, wildly different from the business they're in. So it's not even like they're looking at a synergy. It's from a sheer just almost an investment where their plans usually are folding in maybe the management or the marketing, or there's something that they're doing in their current business from a role that they can fulfill in the acquisition. But at least with us, it's been rare that it's something that dovetails together for some reason. Like one was a paint manufacturer, and then they bought a automotive lift distributor. They don't make no sense whatsoever, right? But it just was a business they were interested in. The numbers made sense. It was something they could do. Just something they had a person who could manage it. Just all kind of the little things that didn't have anything to do with the widget, if that makes any sense.
No, yeah, that makes no strategic sense at all. But okay,
Well, me personally, I actually own several other businesses that same kind of thing. They just so unrelated. They make no sense. But from a management standpoint and the marketing team and some things like that, we all shift gears and cruise along, and it just kind of seems to work. Now we leaving some dollars on the table and some efficiencies maybe, but as a whole, it's working out pretty well.
Yeah, and there's just an aspect of it too that is, within our CFO services, as we worked with so many business owners, we've just met this profile of these owners that often they're this visionary founder, right? And that's not to say there's others that are a bit more operator mindset. Like we reference a lot a methodology through what's a book called Predictable Success, and it talks about different types of profiles within a business. And there's certainly, there are people that are those visionaries, right? That it's like, hey, every month there's a new flavor of ice cream that they're thinking about, and that is their favorite flavor of ice cream, right? And that they're onto a new passion project. But at the same point in time, for some people that can be incredibly frustrating because it's like, hey, we need to stay focused. But these are the people that are bringing new ideas in the economy to life, right? And so we need that. The idea that people have ventures in different places, that if that's what excites them and keeps things going and keeps the economy growing, and at the end of the day, that if we can make an economic transaction happen between a seller that needs to sell that business and this person's interested, but it's way out of left field, so be it, right? It's good. Yeah, it's still good for the community, right? That business is still in place and it's still growing there. So, I am interested, Dan, that a little bit of fun here as we kind of begin to wrap up. What's the worst personal business sales story you could share with us? Like where just something just completely eroded, or like, man, the skeleton's in the closet. I realize some of this has to stay confidential, but I'm just really interested to understand, like, what's the worst you've come across?
I hope this counts, but So I've been in the business valuation space, or acquiring and divesting small businesses my whole career. So I've been around a lot of small businesses, but for this one in particular here, when I first got into when I bought a brokerage firm, I made a trip to a suburb of Houston to deliver some valuation news, and we kind of went through our whole thing of, hey, here's what it looks like, and here's what you're going to net. And I could tell it wasn't really, we weren't quite at the expectation level of the owner. So, okay, we did our thing, and I left. And then the next morning I saw a headline and looked into it, and the business burned to the ground that night. So,
Oh man,
I don't know.
Oh, that would be very serendipitous. Yeah, that would be very, very serendipitous. Oh man, I wonder if their insurance broker caught on to that too.
Yeah, I have a funny feeling that there was a different number from the insurance carrier, is my guess.
Yes. Oh man. Wow. Yeah. That's great. That's crazy that you caught that too. That it just, yeah, you were able to watch that and catch that. So, wow. Awesome. Well, Dan, is there any final things that you'd love to share with our audience that in regards to either selling or buying a business that you feel like from your many years in it and even your background, right? I mean, you were doing valuations, before becoming a business broker. And so you just have, a breadth of experience here and wisdom. And yeah, is there anything else you'd love to share with our audience?
Yes, something I take to sometimes when I speak is this little cartoon that I'll describe to you. But generally speaking, entrepreneurs in general, just have a different risk tolerance or a view on risk than regular people. But to that end doesn't mean you can't do it. And this entrepreneurship through acquisition thing is a great path into that, right? So we sell a number of franchises that get the best of both worlds. You get this existing operation that's also layered with this support and policies and processes and all the things, which is fantastic. But my biggest thing is when I go into some classes sometimes with MBA deals where they're talking about buying a business and nobody's requested information or nobody's like taking a step. They just talk about it and spreadsheet it and all these things, which is great. But at some point, you just got to take the jump. So my cartoon is this guy that has a box of things sticking out of it, and it says plane parts, right? And then he just steps off the cliff. In the next window, he's got the plane going, and he flies off. So it's like you just got to take the plunge sometimes, and and get into the process and work through it. And you're not wasting any broker's time. Our job is to go find buyers. So inquire about the business, sign the NDA, get used to the cadence of things that are going on, and just get in there and check it out. You may find, hey, that's terrifying and I don't want to do that. But the more you learn, the more you're like, okay. And then when you do find the business that's right, you won't be like, well, I don't know. You've had this history now of looking at things, and you'll have something to compare it to. And for sellers, give us a call, and let's, it's come share a cup of coffee, and we'll talk about, what a transaction might look like and valuation and those things, and just get you educated on if that's good for you, or maybe now, maybe later. We're not going anywhere.
I really appreciate having you on the show, Dan. That, please tell our audience where they can find more information about you, about Sunbelt. Yeah, where can they discover more?
Really easy. Just sunbelttexas.com is the place to go, right? The place to go to buy or sell a business.
And I really appreciate this. Like I said, I kind of geek out on these subjects that I think we may be working together at some point in the future once we built Brady Business or Brady CFO a little bit further, and Brady Enterprises needs to take off.
There you go. I'll be your head of your M&A firm.
Exactly. Brady Enterprises needs to take off. So, no, this is a real pleasure. And just thank you so much for your insight and your wisdom here. It was a pleasure.
Yeah, thank you so much. I appreciate it. Have a great one.
Awesome. Thanks, Dan.
See ya.